And that's sort of what's happening. They're having a higher than normal
to your point
selection.
on do I have a day job and the time allocations, there's a specific sort of technique that the IRS puts in their audit manual in terms of before they tell the taxpayer why they're asking these questions, they just start asking questions. So when do you start work every morning? 8 o'clock. So when do you go home? 5 o'clock. So what do you do between 8 and 5? Oh, well, I've got a busy architecture practice or I'm a dentist or something like that. Oh, really? Okay. So I see you have some real estate. So when do you work on that? And then pretty soon, asking all these questions, it becomes clear either they don't sleep or they have more hours in the day than anybody possibly could.
Yeah.
And clearly it doesn't work out.
Right. Now, does this 750-hour test have to be met for each property?
No.
Okay.
So remember,
actually, it does unless you make an election.
Right. So there's a real estate professional.
Yes.
And you can count if you had some time on a rental property and you had 600 hours on a development job and you had 200 hours on a rental property. You can marry those because those are trades or businesses. So a rental property is a trade, and that would count as well. So then comes the question: what would happen if I don't meet certain objective time tests on? Let's say I've got 4 rentals and they don't really take a lot of management time. Is there a way I can combine those? And yes, there is. You can make an election, which is irrevocable, as to those properties that you own at that time. You make an election and you say, I want to aggregate all the time that I spend with these so it's considered one activity. So let's say, for example, one of the tests is 500 hours in these rental properties, and each of these properties takes 130 hours, which would be 520. You make the election, presto, you get 520 hours, they qualify, you can take the losses. And that's really the objective here.
Yeah. So one of the things that happened recently, in one case that I saw, was evidently the court, when it was coming up with its ruling, they said the taxpayer wasn't able to come up with a copy of the written election. Mm-hmm. So some people don't think the tax returns are permanent records.
Right.
And this is one item that you want to keep someplace so you can get your hands on it.
Right.
Because
this is in light of e-filing and what have you. I mean,
yeah. Oh yeah, especially e-filing.
Well, there's one more thing on the election too that you have to keep in mind. If you made an election, for example, for tax year 2010, you have until the filing deadline, which is April 15th of 11 or extended. If in 2011 you acquire additional property, the new property acquired is not automatically aggregated, and you have to re-elect in 2011, which would be the next filing cycle. Mm-hmm. So you have to always sort of make that decision. And I know in our office we use Lacert to do tax returns, and so the Lacert has these cheat sheet diagnostics, and it says, hey, wait a minute, there could be an election here. They sort of trigger that. And I don't know if TurboTax does or whatever, but that's the kind of thing you got to think about.
Right.
In this situation.
And a lot of people just don't know. They don't even know that this election exists, and that's part of the reason for having this little show. Okay. Well, what if you didn't make a written election? Is there any relief that's available?
There's a ruling. What's it? 2011 something or other.
34 revenue procedure.
Yeah. So the IRS issues from time to time these things called revenue procedures, and they're basically guidance to taxpayers to tell them how to do things in order to achieve certain outcomes. And one of the more popular aspirations of these procedures is for filing elections of all different kinds, and this is just one of them.
Yes. So anyway, so they actually do allow you to sort of do a catch-up election in this particular case, and it's done on an amended return for the last tax year. So, but see your tax return, prepare again, revenue procedure 2011-34. Folks, spend a little money, get a little help. Don't try to do this one on your own.
Well, what I say, if you Google that, you'll read it, and then you'll realize why you'll realize why the fees are reasonable. I mean, with the tax preparer, but also I always encourage people to read about these things ahead of time, because an educated client's a much better client.
Oh, absolutely.
Yeah.
Sure. Okay. So we talked a little bit about the different types of activities, but now let's talk a little bit about participation. So what sort of things count when you're figuring those hours for participation?
Right, right.
I give a nice list to help you out here.
So the list is, work done by the owner.
Mhm.
Finding the tenants, collecting the rent, supervising repairs and maintenance, locating the properties, being involved. Bookkeeping probably is not, keeping track, it depends. Calling a property manager in another state on the phone to manage the so-called manage the other properties, that doesn't count because really the management is done at the other end. Some of the work that is not customarily done is the so-called busy work. Things are just, I spent a bunch of other time, maybe like, I don't know, would you say gardening? If you're out there pulling the weeds, does that count as time? I don't know. It would be hard. It would be a stretch to call pulling weeds.
So some of these things, well, basically what it's come down to is this: is that the IRS has put in its regulations, and it may have drawn from some dicta in the committee reports to the effect: if you're just creating busy work in order to come up with enough hours,
Right.
then they're just not going to count those hours. So they're not making it easy for us to do this.
Right. Right.
And so it's not a real friendly or slam dunk type of a section.
But again, all hope is not lost on the hours test. I mean, the primary test is it a 500-hour activity? Well, a rental unit doesn't typically have that, so you can fall back on the aggregation election and aggregate all into one activity, or there's other alternative tests that are available to you. The only person rule, the 5 out of 10 year rule, all those tests again are listed in the Form 8582 instructions or in the publications.
So how do you document what your participation is?
Like anything else, is a calendar on which you write contemporaneous entries.
So you need to keep a calendar, a diary,
Right.
about what you're doing each day.
And you need it contemporaneously. You
Yeah,
can't
you need to
after
do it
the
as you
fact.
go along.
Right, right.
Yeah, so it's tough. Now, once you meet these tests in a year, do you have to meet it the next year?
Yes, every year is independent.
Yeah, so you have to do it each time, and you might qualify one year and not the next.
Well, yeah, think about this for a minute. I know a guy who is, for many years, did a bunch of real estate stuff. And one of the things that he did was he had a real estate loan brokerage, so which I would call real estate brokerage. In California, that's the same license as a broker. And he did some other things related. He did other types of consulting work or stuff that really wasn't real estate. But when you measured it was more than half the time, because in 2003 or 4 or 5 or whatever, there was a huge amount of loan activity. And the consulting activity was not so much, and he, of course, achieved 750 hours. Well, fast forward to 2010, there's no loan activity anymore, or virtually dried up. So that person was a real estate professional in the early years, in 03, 04, 05, 06. In 08, 09, 10, maybe later, not a real estate, it's just a consultant doing other types of business management consulting. So that person used to write off these deductions on rental properties, cannot now. They say write them off against other income. So that's a perfect example.
Yeah. So maybe, I think we got about a minute left.
Okay.
Maybe just a
war
30
story?
seconds, no, not a war story, we don't have time for a war story. Maybe just a piece of advice. So if you had somebody that came to you, and say you have a husband and wife, and they come to you and say, we want to start investing, we're going to buy houses and we're going to start renting them, now we want to be real estate professionals. What would you say to them?
Well, I would evaluate what they're doing now and see if it's really an economic value. It's an economic decision, it's not a tax decision. And frankly, we're talking about deducting losses. If both these husband and wife want to go into something and they want to lose money, well, there's a lot of other fun things they can do besides tenants and toilets.
Yeah.
So make a good decision, make money, pay taxes. It's okay.
Yeah. Okay. I think we'll leave it at that. Scott, thank you for being my guest.
Thanks.
And folks, I hope we've given you some food for thought, some good information to start from in this process. And there are many people that are looking at real estate investment today that haven't in the past. There's some great opportunities out there, but I think you need to be realistic about your expectations. We'll see you next time on Financial Insider Weekly.